Hello everybody, and welcome back to the channel. This is episode 19 of my investing journey, where I share my weekly portfolio updates, ETF buys and sells, income progress, and how I'm building an income-focused portfolio over time. As always, this is not financial advice. I'm just sharing my real portfolio and documenting this journey and hoping that, if you're following along, you get some benefit out of this, okay? As you can see, we had a very good week. Portfolio is up 8.67% year to date, and we'll go into that with more detail as we follow into the presentation. But I have to say that it was actually a very, very, very good week. This week, I added my usual $75. However, as I mentioned a couple of weeks ago, I got some money back from my taxes. It doesn't happen very often, but I got some money back, which allowed me to do a $200 one-off contribution for a total of $275 that I added this week. So yeah, that was a good week. So what did I do with that money? Well, I bought quite a lot actually. I bought one share of CPCC, I bought one share of GLCL. Sorry, I've got a little bit of a cough. I've had it kind of like a cold, and it's still lingering. 2 shares of HDIV, 2 shares of HHIC, 1 share of HYLD, 2 shares of PAYG, 1 share of 60, 1 share of HPYB, 1 share of HPYE, 1 share of QQCL, 1 share of HHIS, and 1 share of SDAY. So, this was a broad accumulation week, right? No trimmings, no rebalancing, just making sure that, I'm adding across the portfolio, particularly in those sectors that have had the most losses in the past weeks, right? Like the metals. On the income side, I received $37.97 this week, which is made up of the monthly payers, as well as the first round of bi-weekly payers. Okay, if we compare this to the previous month, which was $33.38. That represents a very healthy 13.75% increase month to month. So, this is absolutely fantastic. This is the kind of progress that I want to keep seeing, right? In terms of overall portfolio performance, well, we're up 8.67% year to date, like I showed you in the very beginning, compared to last week's 4.37%. You could say that we've almost doubled in a single week, which is a huge move. Okay, so I have to say portfolio remains in the green, and I'm pretty very happy with how it's performing. In terms of which assets did best last week, obviously AMD went to the moon, like they say. AMD is up 24.58%. That's two massive AMD-driven weeks in a row, right? Which is pretty incredible. But I have to say, this position has been on fire, and the leverage structure really amplified the strength this week, right? So I'm very happy. Another great story was obviously gold, GLCL, which surged 11.8%. Which not only made up for all the losses for the previous 2 weeks. I don't know if you remember, but last week we did highlight that my metal sleeve was lagging behind. Well, gold is up, and it's here to stay, and it definitely is making a name for itself. In terms of what we've got in the week-to-week ranking, this week we have, I believe we have 17 portfolios on the green and 3 on the red. All right, so we've got AMD, GLCL, QDay, CPCC, AGCC, and HHIS, all above 5%. Then we have HYLD, QQCL, HDIV, USCL, ABGY, PAYG, all above between 2 and 5%. And then HPYE, EC, 6C, HPYB, and C-Day, which were like, modest gains, right? The ones that were a little bit down, S-Day, which was down 0.35% this week, HHAC, which was down 1.36 this week, and uranium, which was down, CCHI, 1.89%, which is not really that bad, comparing that it's been doing very well for the past 2 weeks, right? So, not bad at all. In terms of, why are CCHI and HHAC? Well, uranium had a softer week. Okay, it just cooled off a bit. I mean, it was doing pretty well in the past 3-4 weeks. And HHIC has a very strong Canadian energy component. And, when oil buckles a little bit, where it's normal that HHIC is going to buckle a little bit too. All right, but, nothing that I'm concerned about at all. This pattern actually fits with what we've seen before. Whenever there are talks of a peace deal in the Middle East, odds rise that oil is going to soften and come back down in price. And obviously, that has a heavy pressure on Canadian oil names, right? In terms of, for me though, if I have to say, it's like the biggest takeaway this week is that this was just a great week for the portfolio overall. My leverage tech name worked the way they're supposed to work. Sorry. My metal sleep worked. My income engine kept paying up, and like, even though some of the funds have reduced their distributions, some of them have upped it up. So, pretty good. And the best part is that the portfolio moves sharply higher, right? And this is exactly what a well-diversified income and growth mix can look like when multiple parts of the strategy line up at the same time. Okay? Now, I'm not saying that this is going to be like this forever. Of course not. We're going to have more red days, and then we're going to have more green days. But overall, as long as we have more green days and more red days, then, we're absolutely fine. The income part is actually what keeps this growing. We are at $37. I predict, what is the prediction for this month? The prediction for this month, hold on, let me take a look. What is the actual prediction for this month? We are predicting, what are we predicting? I think we're predicting over $40 this month. No, we are predicting $53.04. We're only $25 away from one of my monthly contributions of $75. Sorry, one of my weekly contributions. That's not bad at all. That means that if I wanted to, one of those contributions, I wouldn't have to do them anymore. So yeah, no, pretty good. Obviously, looking ahead, I'm going to still be watching whether, this constructive backdrop continues. If earnings stay strong, because earnings have been amazing, if macro headlines remain supportive, and if oil pressure keeps easing, well, then a lot of these portfolios should continue to benefit and continue to grow and continue to be in the green, right? The one area that I'm going to be watching a little bit more closely is anything with heavier exposure to energy, right? Because if oil drops more sharply, ETFs like HHIC could stay a little bit under the pressure, and they could actually, suffer a little bit more, right? But overall, like I've said before, this was a very strong week. And this is really it for episode 19. Thanks for following along. If you like what you see, please throw us a like and a subscription. We're trying to reach 100 subscribers by the end of the year. And I will see you all in the next update for episode 20. Thank you so much. Bye-bye now.